Okay, we are live again, doing our regular Friday live. I love this opportunity to chat with Megan today. My partner in crime is back with me. You look a little tan, Megan. That's good.
Yes,
Good to get a little
yes,
sunshine.
that's right.
Um,
Always have to do that.
but this is a fun topic for me because after being in the mortgage industry for 30 years, almost 30 years, I don't want to age myself prematurely, but almost 30 years in the mortgage industry. Over half of that, I was a loan officer. The other half, I was in some type of a leadership position. So it was a sales manager, branch manager, area manager. I was a regional, had some executive roles, had a lot of fun in different leadership positions in the industry. And now my career has pivoted again. And instead of working with loan officers and home buyers, I get to work with entrepreneurs. And in working with the entrepreneurs, I have the opportunity to share with people the value of being able to create their own company. And it might be people that already have their own company, but they want another company. And specifically, what I mean by that is real estate agents, real estate broker owners, and real estate agent large teams that want to bolt on a mortgage company onto their real estate offering, right? Under the real estate company. And then our other avatar really is, and this has been working really well for us too, that second avatar is a loan officer, most often in retail, that wants to open their own company, but they're scared because they don't know where to start. They don't know what to do. They don't really have the experience. They don't know where the manual is. Where's the manual to start your own mortgage company? So those are our two avatars and the two types of people that we're talking to every day. And I'm running pro forma for people and showing them the value, how we can help them increase value of their company and increase their income, but also better serve the client. So we're collab franchise, and what we do is we provide a service to help others open their own mortgage company in the franchise model, which means we can bring in the support, the systems, the processes, and the proven experience to help them make sure that they shorten the learning curve and reduce the number of costly mistakes. Megan Marsh founded this company with her partner, Andre, has been in the mortgage industry for over 20 years in the industry, has opened several of her own mortgage companies, has opened a title company, has opened a commercial lending company. So much experience behind all of that she found a passion for helping other people do that. And that's where Collab Franchise was born.
I
Right?
like it. That's a great intro.
I'm doing my best. And here's something interesting I've been hearing a lot of lately as I'm talking to real estate broker owners. And they say, yeah, we've been approached about various different types of partnership, but yours is different. Yours is different. But before we kind of go into that, which is really the purpose for this call, I want to share kind of what I've been hearing. And I'm sure maybe you're hearing the same, Megan, but some of the options are, well, we're just going to get our agents licensed to originate loans so they can make a little more money. Yeah, that's fairly common. That's been around for a long time and it's becoming more common. The other thing I heard is I've been offered to be made an employee, and this is a company, a real estate company broker owner. They want to make me an employee of their mortgage company and therefore come up with some allegedly legal compensation plan. The other thing I've heard is they're making them branch managers. Again, real estate company owner, make them a branch manager and give them therefore the P&L to realize the profit upside from originating within a branch, within a retail model. Have you heard? Here's the third one I've heard that I thought was really interesting. It's creating a new company, right? But it's different than what Collab's doing is because they would maintain 65% ownership in the company. 45% is owned by the real estate company, 65% maintained by the mortgage company. So it's a joint venture, right? Yep. So ownership is split 35, sorry. And therefore the profits are split 65-35. So I don't know if you've heard of any other sort of creative models, but all these things are coming to the surface because real estate companies are trying to figure out how to generate more revenue.
Yeah, I mean, and that's what I was doing 10 years ago when my my background, my family has a real estate brokerage. I didn't think about opening my own business and kind of got thrown into it. And so when you get thrown into things quickly, I find sometimes you make decisions a little too hastily, or if you don't know all the options out there, or people, most people are going to try to sway you to the way that they're doing things. And I think just getting all the options is really important right now, because I do believe our industry is moving in this direction. And, when we built the model, it really was at first, I made it in a way that how would my family, who are real estate brokers, how would my husband want to own an ancillary business, that like, how would he want to be involved? What would he want to do? All those things. And so I have heard of all these things, and I think we've talked about it before. The joint venture, right, is probably the most common if you want to have ownership, where the downside of the joint venture that I've heard is that 45%, let's say, it gives you some good income, but for the average small business owner, real estate broker owner in your community, that 45%, like you still, you're making the least as the broker owner. You can make really good money selling real estate, but the broker owner, you really need to have a very large team to start making any like significant income owning a real estate brokerage.
And only 45% of it, or 35% of it, or whatever the split is, you're cutting your revenue in half.
Right. You're cutting your revenue in half. So what that does is it creates a situation where, you are like, oh, should I let go of any other equity for, if it's other agents that you work with that make it possible, who support your ancillary business, right? And it really just creates this situation where it can only be you. And just to give you an example, my husband and I have a joint venture in one of our ancillaries that we started, and, it's gone really well, but we don't have the control with having other people that have, he owns 45% actually, and the other two business partners own 10 and 45. There's been things through the years that we would have done differently, or right now that we want to do to grow the business, and we can't because we don't have the ability to make those decisions. And so that was one of the reasons why the franchise model was such we wanted to be able to have control and be able to, give and invite the people in who support the business. And that's not something you can do usually with a joint venture.
Yeah.
So that's one reason.
Can we dive, sorry, before you go on, I'm sorry to interrupt your train of thought here because you're on a roll, but I want to dive into what that really means, because this is a key point. I've talked to so many people that are excited about this part, because when you're in a JV, you own some split of the company. Let's just call it 50-50 split. Mm-hmm. What you can't do then, because you only own half the companies, you can't bring in the partners that are going to support the business, like you just said. What that means, though, is you can't bring in your top producing real estate agents. You can't bring in the loan officer as an owner. You don't have control over where the shares go without further diluting your side of the 50.
Yes. And I've heard other people who have joint ventures say, like as a real estate professional or real estate broker, you do a joint venture because it takes the operations off your hands typically. Mm-hmm. But then if the person the company that you're joint ventured with, if they have someone in a position and it's not working well, right, it's very difficult to make those it's hard to make decisions as a business owner in any circumstance when it's just you. Now, when you've got two groups trying to make those decisions, it's really, really hard. Mm-hmm. And so it just limits you. It really limits you. And I think for most people, if you're looking to grow your income and the value of your business, you are an entrepreneur, having the ability to control and make decisions, because none of us know where what our industry is going to look like in 5 years, in 10 years. And you want to have the ability to maneuver and shift and do the things you need to do for your business, for your, real estate agents, loan off, for everyone. I mean, gosh, my business looks so different than it did 5 years ago. And if I had to okay that with other people, that would be really challenging.
Yeah, that's a big part of it, is the control aspect, and not control from control as a negative connotation, but you can control the direction of the company. You can control the communication when you're the 100% owner. You can control who's involved and who's not involved. So you can build the culture based on that when you've got control.
Yeah. I mean, yes, it just, so for us, like having the businesses my husband and I own, that we have other partners, significant partners in, we are much more limited in those businesses because everybody sees business differently. Not everybody wants to grow beyond their local community. Not everybody wants to, do things one way. That's why business partnerships are hard. And so that's why the franchise model, I was like, gosh, like they could have all that operational support if we set this up the right way and still give them control. Because, for me, the businesses that I built, I am unemployable. And I like to have control. I will freely admit that. I like to do things. I like to make mistakes and be okay with making mistakes and live with the consequences, right? But I need to be able to do it and try it myself. And I feel like a lot of people who are entrepreneurs need to do the same thing. And our industry is just so volatile right now that it's a necessity to be able to do that. And so having full control allows you. So my husband, who owns the real estate brokerage, he's had agents start similar ancillary businesses because they want also to have other income, which we would be okay with them coming in on these businesses with us. Like we're very inclusionary, and we just didn't have the control. So, our points have been proven through the years. And so that's once again why I like people being able to own their own businesses, and us being, businesses and I call them power partners who collaborate together, help each other get better through the resources that we're sharing as a group. Now let's go to the being an employee, branch manager, W-2 employee, because I have a lot to say on this.
I bet you do.
Because I guess right now, so we have an ancillary business, and we're kind of closing the loop up and opening and adding insurance so that we have real estate, mortgage, title, insurance. We've got the whole, kit and caboodle. And, the title company we had, which is the joint venture, like I've shared, it's had some hiccups. Like that's why in insurance, like I have a lot on my plate, but I want to own this insurance company. I want to have the control to do the things that I need to do for my business, but I still need this operational support. So we've looked for models now that really mirror. And these options where in the mortgage industry is very unique, right? It's because of our licensing. I won't go too far into it, but companies have to pay the person who has the license. So let's say you are a broker owner and you're like, all right, I'll get my NMLS license. Okay, so you get your license and you get hired as that employee, right? And then you have a loan officer who works that business. So in mortgages, the loan officer can get paid their comp plan. And then you can get paid whatever you work out with them. But number one, it's W-2 income, the highest taxed income that's out there. Our industry, we have the ability to make really a strong living, and being able to write off our expenses and not have to pay as much in taxes is one of the big benefits and strategies that everyone should be using, first of all. Number two, when you talk about joint ventures, you lose control. you really lose control if you go on as an employee. Because let's use an example. Let's say you own a real estate brokerage, and let's say you have a operations manager, or, let's say you have two other people in your office who help do work for the mortgage company. They somehow, do some work with the team. They cannot be compensated. They can't. Like, they could go get their NMLS license, but there's also rules about who you can only pay one person directly in their name. And then there's, I believe, Brian, the override, right, to a manager. You can't start splitting it out like you can if you own.
Yeah. That's what I would assume the big limitation there is, because you have to compensate the originator, and then the sales manager doesn't have to be licensed, but you're limited on what that revenue could be, right? And you can only change that revenue so often.
Yeah, most compliance attorneys will tell you they don't like to see you changing it more than once a year even.
Okay.
And so, if you've got another person on your team, because you're really creating this one-stop shop where it helps each other, like, you own the businesses, you can bill your own companies, you can pay people how you want to pay them in any which way you choose.
Mm-hmm.
You can't do that when you're a W-2 employee.
Got it. So, and then I guess the other downside is when you do it that way is you're not an owner. You own that P&L, and you benefit from that, but you don't own a company. So,
which I think there's I want to make one more comment on that.
Sure.
Okay.
Sure.
Like, yes, we all want extra income because this industry is crazy. But really, and I always compare it to owning rental properties. My husband and I, that's how we started, was we owned rental properties. Like, none of us in real estate would ever, I can't think of many situations where we want to acquire a piece of real estate to literally just take the cash flow and then just give away the building.
Mm-hmm.
Like, we wouldn't do that. But that's what we're doing when we go work somewhere as a W-2 employee. We're like, oh, we just want the cash flow for now. No, we want the cash flow so we can step off the hamster wheel, build our company and teams, have financial freedom, build the businesses we want. And when you start adding ancillary businesses, it starts bringing it's a cumulative value of your businesses. In a way, you are starting to make it residual, because the real estate feeds the mortgage. You're creating this residual flow of business and income that really just takes you as a business owner to another level that you don't have if you're W-2. And I get being nervous, like, will it work? Will it not work? Because I opened an ancillary company without knowing what I was doing, without a model, nothing, just doing it. And we went through bumps. That's why we started creating the models that we have. But for me, like, right now, opening an insurance company, the last thing I would ever do is go and be an employee somewhere. I will not do it. Like, it would just make things so complicated. And the last piece I was going to share is, a lot of the models, like, if you're in real estate and you are bringing, adding mortgage, like, do you want to do mortgage full time, or do you want it to operate? Because a lot of the models that are out there where you're a branch manager, in our industry, you're a branch manager because you're leading a group in mortgage. You know how to answer their questions. You know how to solve problems. You are firefighting. You don't know how to do any of those things. And most of the models in our industry who allow you to be a branch manager, their comp plans are built around an experienced person stepping into that role. And there's not a lot of training. There's not a lot of guidance. Yeah, there's resources you can check on. But if you really want to build a valuable business, you need mentorship with people who have done this before, so that you're truly building value for yourself and your family. And you have something that you can either hand over or sell one day, and that you can be generous with the people who have made it possible for you. And so, that's just why, I am very vested in the model that we've built, because it empowers small business owners, and it elevates their business, and it compounds their income and their success.
Well, and does it in a flexible and compliant way. I mean, I've been in various mortgage models over my 30 years, and I'm very familiar with a branch P&L and how all that works. I mean, there's income there. I think you could argue it's less income, and they're going to run the show. They're going to call all the shots about how you manage that P&L, who
And
gets paid what, and what you're doing with it.
Right? Most of us, I went into that model once for 11 months, and I could never get straight answers. It was confusing for me as somebody who really knows the industry. I can't even imagine going into that model if it's not your core industry.
Yes.
And you want to have a good experience. You want to have people that will help, the loan officers you bring on that can mentor, that, depending on your structure as a real estate team or business, you want to have somebody who can help you continue to make your team, your business more valuable, and people who have kind of walked in those shoes. And if you go into a model where it's more the branch manager model, where maybe it's like per file or stuff like that, I think you really need to have some basic knowledge. And it's still tough. We tell loan officers that who come onto our transition team, like, look, we're not, when you're in transition, we're going to teach you everything. We're not going to be the least expensive. We're not going to be the most, but you're going to get everything you need every single day, because we've run one-person companies. We've had teams, and we're big producers. We've hired loan officers. Now we run multiple businesses, having ancillaries. You want to get led by somebody who's done the things you're trying to do. That's how you achieve success at it so much faster.
Yes. And that actually leads into something I'd like to touch on, because as we're wrapping up here, but I want to share a couple of examples because this model isn't for everybody, but It does fit a lot of different scenarios when people have the right sort of entrepreneurial mindset. So here's kind of two extremes. One is, and you were very involved in this call, and I won't say names or location, but it was a large boutique real estate company. They're doing 600 transactions per year. Their mortgage capture with their current in-house relationship was 42%.
Which is very high.
Which is very high. It's achievable, but it's rare. But they're already getting a big capture, and they're doing a desk rental agreement, a marketing agreement, all standard stuff that we've done for years. And they were collecting $7,000 a month in revenue for those marketing services. Wow. Also, based on that volume, makes a lot of sense for that agreement.
Yeah,
but we ran a P&L.
Still a pretty high agreement. I'd be a little nervous on that one.
But we ran, we'll get this, we ran that P&L for them to where if they open their own mortgage company under our franchise model, they were going to take that $7,000 to $50,000 a month. And these were very highly successful people already. They don't need the money, but what they're going to do is they're going to reinvest that back into the company and grow the company.
Yep.
Right? Or the majority of it, right? They're going to reinvest in their agents, reinvest in their clients, reinvest in their technology. No brainer. I talked to this individual yesterday. I haven't even had a chance to talk to you about this one yet, Megan, but he's a solopreneur, one-man show loan officer, has been in mortgage for almost 30 years, and has had his own brokerage for 5 years. He's doing well. He's doing 4 or 5 transactions per month. He's very happy. He's going well. But I suggested, what if you partnered with a real estate company? What if you took your existing company, brought in a real estate partner, and then they benefit as an owner of the mortgage company? You benefit because it's going to drive more volume because everybody's engaged. Bring in some of the top producers. I said, do you know a company owner that would like to do something like this? He said, I just left an office 15 minutes ago. I've known this guy for 10 years. He's a personal friend. He has 110 agents in his office, just a large boutique real estate company. So he and I are going to go through all the detail on Monday, and we're going to put a deal together with an existing company.
And before I have to jump off here today, but people might be thinking, okay, this guy has his own brokerage. Like, why would he need us? Right. And I think that's where, when I started my brokerage and didn't do it right for the first 7 or 8 years because I was originating. Like my focus was on getting business, serving the agents. So then I had no systems. I wasn't doing things right. Then you go get picked for an audit, right? And so if you're going to partner up, people who have owned a brokerage, single person shop, they only know so much. And if they want to grow, that's not where they should focus. And you want to put your best foot forward so that you can, I mean, he has the potential to quadruple his business if him and this real estate company do it the right way, and being able to walk in and say, look, I've got systems, because when they go to sell their business one day, it's much easier for a buyer to look and say, I can step into this.
Because it's already packaged. It's already packaged together. Yes.
It's packaged. It has systems. They know that somebody buying it knows, they have trainings. Like it's so, and that's why a lot of people invest in franchises, because it makes it easier for anyone to step into that business. And, you know, a franchise is just providing the systems, the support, you know, the cost breaks that a group of businesses are sharing together.
Yeah, amazing. All great points. And I know you have a call in 4 minutes, so we can wrap this up here just by saying, please, you know, if you're watching us live, please drop a comment here and ask your questions. If you're watching the recording, which I know a lot of people do, just drop the questions in a chat or reach out to me. Send me a DM on LinkedIn or Facebook. I can be found on the Google. Megan can be. And we're happy to help and run some financial scenarios for anybody that is interested, right? To see if it makes sense. That's all.
Yes.
Thanks, Megan.
Awesome. Thank you. We'll see you guys next week.
Bye-bye.
Bye.